Hello and welcome to another episode of a Brothers Creed podcast where we talk about motivation,
experiences,
and exploring new experiences and everything the world has to offer. Today on the episode, we're gonna talking with a good buddy of mine, Matt Koehler. He's a Renaissance man. Has a lot of hobbies, and one of those hobbies is cryptocurrencies. He's investing in them. He mines them. He mostly mines them, but he shares with us his experiences. He shares with us some of the wild tales of the cryptocurrency market, and I share some of my experiences as well. And it's a really good topic that we discuss for both beginners and people who already know about cryptocurrencies. So it's a great episode. Let's go ahead and dive in.
All right, let's do it.
You can't climb the ladder of success with your hands in the pocket.
We will not go quietly into the night.
They tell me you're a man with true grit.
I am the one who knocks.
Don't ever tell me what I can't do, ever!
That's how winning is done.
All right. Hey, welcome, Matt. Thank you so much for joining us today. We appreciate you taking the time to chat with us about your hobby.
Thanks for having me.
Matt is a good friend of mine. We go way back. He's kind of a Renaissance man. He does a little bit of everything. And so we'll have to maybe have you back on to talk about your shooting experience, your hunting experiences, and then some of your other talents that you have.
Yeah, absolutely. I love that.
But today we're thankful that you come on to talk to us about some cryptocurrency stuff. It's kind of a wild time in cryptocurrency. You and I have known each other for quite a while, and we share investment things back and forth, and just tips and tricks and stuff. And I remember back in 2017 now, that the market was just going absolutely wild.
Yeah, it was.
Yeah, that was so quick. First, I know this is your interview episode, but let's first start with a story about me from my point of view. So I had probably invested maybe $4,000 into just a couple altcoins, and altcoins are alternative coins other than Bitcoin, and it was just on fire, absolutely. Especially at that time, all the altcoins were on fire, and my account went up to like $45,000, and I was like riding high, man. I was like, this is awesome. I'd check it like the next day and he'd be like, I just made $10,000 overnight. And it was immaterial because I hadn't realized any of those gains. And then I know, Matt, you were talking to me at the time. You're like, you should buy a rig. And I was like, yeah, I should buy a rig. And I bought like the frame for it. But I was like, I'm making way more money with my money just like in these altcoins than I ever would mining. Yeah. And then like come mid-January, it all came crashing down, and I barely pulled out with what I had put in. So that was
that's better than most people's first foray into cryptocurrency, I think.
Yes, you're absolutely right. So Matt, you've been in this game for a while. I know you told me about Ethereum, which is one of the biggest cryptocurrencies, a while back. How long ago was that? How long have you been investing in that?
Well, I haven't really invested much in terms of coming money out of my wallet.
Yeah.
But, so I got started. Ethereum got introduced to me by a friend in the Navy who called me up. He knew I had some investment acumen, and he works in IT, and he called me up and said, hey, take a look at this Ethereum. I want you to look at it. It looks like kind of a flourishing new technology, a new idea that the world hadn't seen yet. And so I looked at it and immediately was intrigued because I'd seen Bitcoin over the years be really volatile, and Bitcoin's always been pitched as kind of a currency.
Yeah.
Well, it is a currency, right? Yeah. Maybe a gold competitor or some sort of hard asset, even though it's digital, some sort of hard asset currency. Mm-hmm. And Ethereum's aim kind of took that blockchain framework that Bitcoin's built around and made a platform. So I'll talk about that more in a minute, but anyway, so he calls me up and says, hey, I'm thinking about spending $3,000 on this mining equipment to mine this coin. What do you think? And I asked him to build me one.
Yeah.
I said, yeah. I said, that looks really interesting. Can you build me one? And at the time I had zero experience with computers other than typing on a keyboard and plugging monitors in and things of that nature. So he helped me out. And at the time, there wasn't a bunch of resources on the internet about how to build these things.
Yeah.
So we struggled for probably about 6 months to get one built and running. And then he shipped it to me, and I ran it for several months. And so I was mining Ethereum, which means I was part of this decentralized network. So a lot of people have heard Bitcoin as a decentralized coin, right? And that's sort of the appeal to plenty of people. What that means is the server decentralized. So if you're Apple, right, all the data that's in the App Store and things like that, that's all in centralized servers that they control for good reason, right? But if something happens to their server or a couple of their servers, I'm sure they have redundancies now, but not everybody does. So that's one of the risks. If your server goes down, your presence online goes away, right? And so having the decentralized nature of these coins is what gives it its perceived safety. We'll see. The future will tell whether it's real safety or not.
Yes.
But so you've got what makes it decentralized. Instead of having two servers, one in California and one in New York, per se, whatever, there are hundreds, thousands, tens of thousands of little nodes, small machines. Instead of a huge warehouse full of servers, I've got a Bitcoin node. This is what they call the individual points on the network. And so all of these nodes are verifying transactions, facilitating transactions, and doing the work of the network. And so for that work, you get paid. Right. And so,
and that work is called, the work of doing that is called the blockchain, right? Because it builds a block of a record of that ledger that's continually going. It builds that record throughout time, and that's what creates what they call the blockchain, right?
Right. And so when a transaction's requested online, say I want to transfer some Bitcoin or some Ethereum, my request is put out there, and then many nodes need to go in and verify that. And once that validation has been reached, then it gets entered on the ledger and is forever there at the same time that the transaction is facilitated. Does that make sense?
Yeah.
And so I was interested in being part of the network. And at the point in time, Ethereum was worth $20 when I was looking at this, and it's worth $1,100 plus.
I thought it was $12, man. I thought when you told me it was about $12.
It had just peaked up to 20, and about 2 days after I bought all my mining equipment, it crashed to about $10. There was some hack on the network.
Yeah.
And but I had already bought all my computer equipment, and it was done.
Yeah.
So but yeah, that was my very first experience in the crypto world. Is 3 days after I bought my computer equipment, there was a hack, and it was crashed by 50%.
Oh man. You were bathed in the violence of that market from the beginning.
Yes. And I remember so we ended up getting it all set up, and I got it here and mined for months and months, and my machine actually went down, and I didn't mine for several months. And at the time, I was mining maybe a coin a day.
Yeah.
So several months.
Which now is worth $12,000 about. Right.
Oh well, each coin's worth about $1,200.
$1,200. Yeah. Okay.
Yeah. $1,200. But 60 coins. I mean, you do the math.
Yeah.
And we can talk about this at some point in the future. I mean, I think, $10,000 plus $20,000 Ethereum's not out of the question. Yeah. There's some things happening with Ethereum, and we should talk about the difference between Ethereum and Bitcoin before we get to that. But I saw the Ethereum network having utility.
Mm-hmm.
So the main difference between Bitcoin and Ethereum is Bitcoin's entire purpose is to be held as a coin.
Yeah.
And just to be held as an asset. It doesn't do anything, just like gold. People compare it to gold all the time. It doesn't do anything, even though actually gold does, right? It's used in manufacturing, but I bet 90% of its price is probably just speculation. So whereas Ethereum, it was designed to host smart contracts, and which take the form of applications. But since Ethereum's a decentralized network, they're decentralized applications, also known as dApps, right? And so this platform gives coders and entrepreneurs an ability to go in and decide or design applications that do things in the real world that have properties that can't be replicated without this decentralized network. Right?
Yeah. Can you give us a simplified example of what like a real world of example? Because I know Ethereum has the smart contract functionality to it that Bitcoin does not. Can you maybe help us understand like what an example of a smart contract would be with a currency?
So, a real world example was, I think it was 2017, maybe 2016. The UN was using the Ethereum network to deliver aid to Jordanian refugees. And they did it multiple times. And I don't know exactly the process that they did it, but the refugee received some sort of a code. And then they took that to a vendor. The vendor gave them goods and currency. And once the recipient aid and the vendor both validated that they had received and given what they were supposed to receive and given, then this smart contract completes and the UN sends money to the marketplace owner for those goods and services. Like it might be, hey, here's $20 in your local currency and a bunch of food and water and maybe a handful of other things that you might need. And so the UN was able to deliver aid to refugees without having to set up tents and volunteers and fly people all over the place.
Yeah, and also like when they send that aid, a lot of times just the warlords get a hold of that money and the people never see it. And so I think that's so powerful because it's like giving $1 to somebody, but with a condition. It's like you give $1 to someone, a homeless guy, and say, "Hey, here's $1, but you can only use it to buy food, shelter, or clothing. You can't use it to sell drugs, or buy drugs." That would be such incredible.
Or drink it away.
Yeah, exactly.
There could be a world where it's a charitable token. On the charity token, it's run on the Ethereum network, and you can give that to somebody in need. And if they take it to a location that has access to that, then they'll scan it and get their goods. Maybe it's worth a sandwich or something, a meal. And then they get their goods, and then whoever the charitable organization is that sponsored the token or ticket, immediately wires money to that entity. And we'll get into decentralized finance. You can even hold those assets, and in the future, we're talking hypothetical too, in the future, you can hold those dollar bills in sort of an escrow account. So that way the owner of the shop already knows that you've put the money out there. So this smart contract, everybody says what the conditions are and puts forward, whatever they're going to do. And then it kind of self-completes. And that's the appeal is once things are set in motion, it kind of just does its thing.
Yeah, there's that trust, which is so critical there, especially when you're talking cross borders. And also, you have the ability to have some kind of say in how that's used. So there are endless applications, right? There's endless people who have.
I think we'll see like term life insurance and things like that. Like lots of different types of insurances, probably car insurances, there'll be banking stuff. Decentralized finance is kind of this emerging marketplace on the Ethereum network called DeFi. And people are just starting to tiptoe into this world of financial applications on a decentralized network where there's a whole lot less red tape.
Yeah.
You know,
yeah,
and potentially for better and for worse. Go
yeah.
ahead.
And I just think that, as maybe the world, all of us are kind of becoming just more technologically advanced. I mean, it only makes sense that moving to something, we live in a digital world as is. I mean, all of our communication is digital. Everything we do is digital. I mean, I don't even really carry cash anymore in my wallet. It's just like a credit card. And so, I mean, if you just continue to progress from that, you went from, gold or coins to cash to credit cards to, what's the next thing? And it just kind of, the progression makes sense. Now, whether it takes, years to get there or whether we're on that path right now, I just think it's kind of a natural progression.
Well, I can speak to that because just this past week, U.S. regulators said that U.S. banks can transfer stable coins.
Like,
so
like
what
Tether and some of the other ones that are tied to the
exactly.
dollar.
Right. And so a stable coin by definition is meant to be stable. So if you're a bank and I'm a bank and I need to send you $100 million, well, I can send it via this stable coin. And in my mind, what that allows is kind of to your point, Ethan, about paying digitally is, so now if banks can transact in stable coins, there's already the technology to instantly swap a coin for another coin. So super simple example, Jack in the Box, you go through the drive-through, you've got, they're already coming out with cryptocurrency credit cards and things like that. It's
I've seen some
right around the corner.
All I have to do is search crypto, and then I get all these Instagram ads for all these credit cards.
So you could have your crypto credit card and go to Jack in the Box and pay for your hamburger with your crypto. And at the point of sale, Jack in the Box can have a piece of software that instantly converts any crypto to a stable coin, and then they bank it on their balance sheet.
Why wouldn't they just convert it to USD? They
could, but you generally have to convert it to probably a stable coin and then USD.
Yeah.
But if I'm kind of assuming the proliferation of stable coin use.
Yeah, that's interesting.
So
I mean, there's a lot of the mechanics are already there, and people say, "Oh, you can't spend it." Like, it's right around the corner.
Yeah, you already have people with Apple Pay and stuff like that, where you can just Android Pay, where you just tap your phone to the thing anyway, and all your credit cards are digital there anyway.
Absolutely, and PayPal has crypto on there now. You can't pay with it on there, but you can buy it and sell it and keep it in your account balance.
It's just funny because when people talk about cryptocurrencies, that means so many different things. From Bitcoin, which is more like a currency, or Tether, which is like one of those ones that's tied to the USD, compared to Ethereum, which is almost more like a company or like an investment idea coin, like that you would invest in, that has actual utility beyond just being what people perceive the value to be.
Right.
Like just money in
the bank. That's
Yeah.
what I'm really interested in, because, I mean, even if Bitcoin completely takes over gold, like the world's not going to change because of that, right? Dollars are just going to flow from one to the other. Fortunes will be made and lost. But with an Ethereum kind of platform, it has there's an opportunity there for some sort of technological leap. Like we saw the internet. Who in the world in 1998 would have ever guessed that Google and Facebook would be amongst the most valuable companies on the planet? And most of their revenue comes from advertising online.
Al Gore probably did, since he invented the internet.
And
you're absolutely right. Yeah.
I think these platforms, like you mentioned, that have utility that we can use and create and innovate on, who knows what entrepreneurs are going to come up with.
Yeah.
Right.
Yeah. And when you're on the bleeding edge of a new technology like that, sometimes you just don't know. Like, is it going to be Tesla or is it going to be Edison that comes out on top? You know, it's just kind of so early in the game that you don't know.
Well, and like the internet, like Yahoo and Google.
Yeah,
like Yahoo
true.
was dominant for so long.
Yep.
And I mean, they're still around, but nowhere near their former glory.
Yeah, and their news is awful. Oh, Yahoo News is terrible.
That's it. And then you have Bing that tries to put itself in there, and I hate using Bing as a search engine. It's just like,
and they tried to like coin. Oh, I Binged it. Like if you listen to ever watch the CW, they'll have people like, oh yeah, I Binged it. Like it's so awful.
I saw Bing's number one search for 2020 was Google.
That's awesome. So what's the difference between 2017 market boom and now? Because I mean now Ethereum's at an all-time high, I think, and then also
almost.
I think it got up to 14 before, right?
Yep, 1419, I think.
And then
I think
Bitcoin's at
way over
3,800. I mean, it was at like 40,000 or almost 40,000 last week.
Yeah.
So what's the difference?
Doubled.
The difference I see is that the altcoins, that's a major difference in the altcoins. A lot of the altcoins aren't popping this time, but what are your thoughts?
Well, I'll start with why I think we had the crypto recession in 17, which will lead me to the answer. The day that the Bitcoin futures started trading on Wall Street, that day was the peak of the Bitcoin market. Right. I think the day that those futures started trading, Wall Street stepped in with their big pockets in a small market relatively to their assets and shorted Bitcoin and drove the price down.
Yeah.
And they didn't have to do so very heavy-handedly because everybody that was in that space was an amateur trader, amateur investor. There was no Wall Street players, no big high resource shops investing in that space. And everybody was so excited, as you know, about the rise in prices. Everybody was using leverage. Everybody was overextended. And so when the futures started driving the prices down, you had people panic selling, margin calls coming in. Tons of amateur traders had,
stop
orders, limit orders, and things like that placed, and they just got wiped out. And I think it didn't take a whole lot to incite panic in the market. And so I think that was done with intention so that the big players could kind of evaluate how they wanted to be in the space, set up trade desks, get positions. And now this bull market seems to be more whale driven. So right now there's more addresses that hold 1,000 Bitcoin than there ever has been in the past. So it's not the little guys buying Bitcoin because you can't mine 1,000 Bitcoin real quick. You got to buy it.
Yeah.
So people with money are buying Bitcoin. Right. I'm sure there's it's retail driven, but I think it's really driven by people with money are seeing all the thing of money going on and the uncertainty in the world. And you know what? Maybe I'll put 1 or 2% of my $100 million in that Bitcoin.
Yeah.
If I lose $1 million or $2 million, it's not the end of the world, but it's something good to have that's unrelated to the economy. Because your house and your everything else, your income, your stocks, everything is related to the economy.
Yeah. So like the flight to safety, basically, like folks run to gold, folks run to Bitcoin.
I think it's a flight to non-correlation.
Okay. Yeah. That's interesting. Yeah.
It's not correlated with the market and the economy. So maybe it does better. Maybe it doesn't, right? Because there's so little data, but it's an opportunity to have a truly uncorrelated asset.
And talk about, the perfect year for people being scared in the market or uncertainty out there. People are just like, oh, I want something else that's outside of all the craziness that's going on in the U.S. right now.
and
around the world.
Yeah,
and around the world.
Yeah, that was a question I was going to ask. Is how tied are they to, I guess the political environment or what's going on? Is that also playing a part into the increase within that, or obviously you have the stock market as well that's kind of been all over the place during all of this as well. So
yeah, I think absolutely. I think that uncertainty is driving people to look at alternative things in all sorts of arenas of their life and profession and their financial world. We printed so much money, people, it's going to have an effect.
They're
some
scared
way,
about
somehow.
inflation.
Yeah, and
absolutely.
I think I was looking at some Google search trend information, and you were talking about Bitcoin's dominance over altcoins.
Yeah.
Roughly, if you combine Ethereum and Bitcoin's total searches, Bitcoin roughly accounts for about 9 out of 10 of every searches. So
wow.
that's what's driving it too, is just public opinion, because the only thing that drives, to your point, because of the lack of utility in Bitcoin, the only thing that drives Bitcoin pricing is adoption.
Yeah.
And I think that's a very important term in the crypto space, is adoption, right? Because the value is really hard to nail down or even estimate. And so it's really about adopting. The more people that adopt Bitcoin, even if it's with $10, right?
Yeah.
There's 4 billion people on the planet that have cell phones but no banking services.
Yeah.
If a quarter of those decide to adopt Bitcoin, even in a small bit, that's, 1 billion people, $10 each.
Yeah. Speaking of adoption, I know that Overstock, they started taking cryptocurrencies, and this was like probably a couple of years ago, but they were starting to take Bitcoin, and there was like a Bitcoin breakout, like a split in Bitcoin. And it was, what was the other one called? Like
Bitcoin Cash.
Bitcoin Cash, which was like half of the value of Bitcoin. And so on the website, people, let's say Bitcoin was worth, let's just say $10,000 at the time. Bitcoin Cash would have been about $5,000. And on the website, people were able to send Bitcoin Cash to that wallet and the website read it as if it was Bitcoin. And so basically you were doubling your money doubling your purchasing power by sending in a lesser coin, and they didn't have the wherewithal to know the difference. And so I think someone eventually pointed it out, and they're like, we've lost tons of money off of this.
And that's some of the growing pains with emerging technology, right?
Yes, indeed.
Those oops moments of not knowing. But yeah, that was interesting. You brought up that Bitcoin and Bitcoin Cash, because there was a disagreement in the community, and part of the community went one way, and they broke the blockchain. It kind of forked. Let's call that a hard fork. Mm-hmm. And so if you owned 10 Bitcoin, you also got 10 Bitcoin Cash when it forked. And so it's free money. Hard forks can present a free money opportunity.
Well, same thing with Ethereum. You have traditional Ethereum, and then you have
classic.
Classic, yeah. And then just Ethereum.
Yep.
So, I was gonna say, so let's say the layman person that has maybe a little bit of experience in, I don't know, let's say the stock market or dabbling here or there.
Robinhood experience.
Yeah, let's say Robinhood experience, right? If they wanted to get into exploring more into cryptocurrencies and what platforms would you suggest maybe using or staying clear of? As far as, I know you on Robinhood you can trade cryptocurrencies, but is that the best platform for it, or what would your suggestion be?
I think so. There's a couple different schools of thought on it. The hardcore crypto people, they don't trust exchanges at all. It's kind of really frowned upon, right?
But they have good reason. How many times have an exchange has been hacked, and just all their money's been stolen out of their account, which isn't safe in an exchange account. So, yeah.
Right.
Yeah.
And they're based in who knows what country.
Cyprus.
If anything happens, you generally probably aren't going to have any recourse. So I tell people to look at Coinbase.com for a couple reasons. If you have a ton of crypto and you're a very long-term holder, you should get like a hardware wallet and get it offline and get it in a fireproof, redundant safe, like a little safe inside of a bigger safe, because if it gets destroyed, it's gone. And then it's off exchange, which takes off the risk of somebody taking it or losing it or stealing it, but you exchange that risk for the risk of losing it, somebody stealing it, it catching fire. So it's not riskless. But Coinbase.com is a U.S. company. They're about to go public in an IPO next year or this year. And according to their website, 90% of the assets that they have are in cold storage on your behalf. So if they were to get hacked and somebody got 100% of the crypto on Coinbase, it would only be on average probably a 10% loss per person, because they can't actually get to the coins. And the fact that they're a U.S. company, if there's any fraud or malfeasance or anything like that, there's regulators and people to go knocking on doors. Maybe you get something back, maybe you don't. But I think Coinbase.com is probably the best place for retail investors to go. And then for information, Coindesk.com, 99 Bitcoin's YouTube page, and for like prices and information on coins, coincheckup.com. They've got different tabs that'll show you different markets that you can access it and some information about each coin. And they list all the coins by market cap. And so as you get further down that list, some have little or no information. One of the things I like about it is they've got some dial indicators that tell you how much social presence they have, what their leadership team is like, how close to a working model or product they have, right? Are they in the idea stage, or do they have a working, functioning coin, right? Big difference if you're thinking about buying it, right?
Yeah.
Because I think what we saw in 2017 and that run up was these companies launching coin offerings. And if you actually looked at the white papers and read what they were doing with the funds that they were raising, almost all of it went to executive team development.
Which just means Lamborghinis and vacations and
hiring your cousin.
Yeah.
And, right? Like, we got to develop out this team. It wasn't that we have this well thought out plan and idea and team in place and we need your money to execute. A lot of it was raising money for us to think about it if we can maybe do it.
Yeah.
So I think that's kind of, again, the analogy back to the internet, pre-internet days. I think that's where a lot of money got wasted too, in people that can talk a talk and sound like they know what they're talking about, and you don't know what they're talking about, and so they can say a lot of fancy words, and you open up your wallet and say, "Man, that sounds great," but the reality
you're investing in nothing. Yeah, you're almost just it's like an idea that's really not coming to fruition.
It's a fugazi.
It's like if your buddy said, I'm starting a house painting company. I've been painting houses all this time and I need some seed money. Hey, can I get $100,000 from you to grow the business? And you're like, yeah. And you work out the terms. And the next time you see that person, they're driving a brand new Tesla. Who do you think bought that Tesla?
Yeah, exactly.
That $100,000 didn't quite go to where you would have hoped it would.
Yeah, the company's going great. Yeah, and you're like, well, where's my return?
They just bought company cars for us all.
Yeah.
Well,
so I think
you're totally right. Like, there's so many there's a lot of scams out there. That's one thing I like about Coinbase is that they kind of vet out some of that garbage that's out there. And they try to put more legitimate thing. When I was on Coinbase back in the day, and actually I still am. I just checked in the other day when you were chatting with me, but there was only like 3 coins on Coinbase, and now there's many coins on Coinbase. So
I think 20, 25, something like that.
They've expanded their offering quite a bit. But I remember when we were back in 2017, I was looking at one company called BitConnect. Do you ever remember them?
Oh yeah, I remember BitConnect.
That was a huge scam. I mean, it was a Ponzi scheme. And they were like, "Oh yeah, all you have to do is give us money, and we'll put it into our trading system. We'll trade it, and then we'll give you like a 50% return every month, or like 10% return every single month. But you have to let us hold it for at least a year and a half, and then at the end, you'll get your money doubled." And I was like, "This just seems way too good to be true." I looked into it quite a bit because YouTube was flooded with people talking about this. Because if you got people to come in, then you would get a piece of their stuff. It was like an MLM Ponzi scheme.
It was a multi-leveling Ponzi scheme.
And then the whole thing crashed down, and then everybody just lost money, and then everybody deleted their YouTube videos about how much they loved BitConnect.
Yeah,
because they lost all their money.
Yeah, anytime you have a,
and now those same people are like, "Oh, I'm a crypto expert," and you're like, but they deleted the ones that they were scamming everybody before.
I heard a industry professional say there's no such thing as a crypto expert right now. There's too much going on, too much changing. Nobody's an expert yet.
Unless you're that really nerdy guy that invented Ethereum. What's his face? The Russian guy?
Vitalik. That's his name.
He's like the nerdiest looking guy I've ever seen, but I'm sure he's wealthier than probably most CEOs now.
Oh yeah. And what's interesting, Vitalik Buterin.
Yeah.
A Russian Canadian programmer. He looks like he's malnourished and
like he's been sitting in his basement on his computer.
Yes, he has.
Eating Soylent Green or something.
But it's a remarkable. If the Ethereum network really launched the industry of crypto, right? Mm-hmm. We're seeing an emerging industry around it with smart applications and decentralized smart contracts, decentralized applications, decentralized finance is growing ridiculously fast. And, I'm sure there's going to be some fraud in the DeFi space. Yeah. And if you're a criminal, boy, so I think it's fraught with risk and opportunity.
The Wild West, really.
Yeah, it really is.
Matt, talk to us about your mining rig. I want to hear about that. I know at one point first of all, those mining rigs kick off a ton of heat because they're basically just computers running. I think it was 2 years ago, you showed me the setup that you did where you hooked your mining rig up to your heater unit so that you could heat your house. Tell us about that.
So those were Bitcoin rigs. So I mined Ethereum using computer graphics processing units, GPUs, and I bought some Bitcoin miners from Bitmain, and they're just big brick. It looks like an aluminum brick with a fan on each end and a bunch of processors in the middle, and they'll melt down. They're so hot if you don't give them enough cold air, right? But the heat that they kick out, like electricity isn't wasted, it's just turned into heat. And so I rigged them up in my garage with some shelving, so they're sitting next to my ducting, and I tapped them into the duct so that the air that came down went in the miners and then through the miners and then back out into my house. So
he's an engineer too.
Yeah. And so I just ran my heating fan nonstop, and obviously my heat kicked in when it needed to, but yeah, passive heating the house. Obviously I only ran those in the winter because you need the space to be probably 50 degrees.
You just leave your garage doors open at night and then
really it was actually just cold enough. It's cold enough here where we live in Idaho to, the concrete and everything's cold enough, and it's not pumping the heat into the garage. So the garage never warmed up.
Yeah.
And so, I ran them for, 5 or 6 months out of the year.
So what's the capacity? I know you said on your other mining rig for Ethereum, you're doing 1 a day. with the Bitcoin rig, obviously the bigger system you have, then the more you can mine.
Right.
But what's like a typical system? Maybe like even some basic costs, and then what's its performance, or what's the potential output?
So I just built. So I hadn't been mining for a while because I was trying to do some troubleshooting and had a lot of other things going on. My business has been. So I had a couple of machines go down, and I didn't really take time to troubleshoot them. And once I did, I realized I just needed to replace some GPU cards. So I just recently got a couple miners back up and running, and the cost would be, I only had to buy cards, but if I had to buy everything, it'd probably be roughly $3,000 for a 6 GPU rig. And that's going to produce roughly about a quarter of an Ethereum a month right now. So, you're looking at maybe a year payback period.
Yeah. So like what, $300 a month or something like that?
Well, and here's the hard thing about that is,
I guess it goes up and down. So
right.
Yeah.
And so you have to almost look at it by the coin you're mining. And so at the time, it would have been about 3 Ethereum to buy the rig. So then you need the rig to produce 3 Ethereum to pay you back. And you're looking at the timeline to bring you that, because when you start dealing with dollars, it's like right now my Ethereum rig's making $350 a month, but that's a quarter of, I'm using rough numbers here, a quarter of an Ethereum. But if Ethereum goes to $20,000, I'm downloading $5,800 a month.
Does it maintain? It'll still maintain that quarter of an Ethereum, or
it's diminishing returns?
Because the price goes up, then you can mine less, or
the difficulty goes up over time, and the
more people jump
reward
in.
goes down.
Is it because more people jump in?
And just the way that this system is designed, the network difficulty constantly goes up. Miners on the network, the number of transactions, I think the prices all kind of affect that in a really dynamic way. I don't fully understand, but I always expect diminishing returns on this equipment. So I think, between building a miner and mining and purchasing, it's hard to say which one's going to be better, because the future is going to determine that. For me, I haven't bought very much crypto, and I think I've had more success because of that. For better and worse, with the mining equipment, I'm a little less emotionally attached.
Yeah.
Because I didn't write a check, so to speak.
Yeah.
Right? At Bitcoin's at $40,000. Hey, I want to get into Bitcoin. Bitcoin's now at $30,000. Ugh.
Yeah, you're not trading it. You're like investing. You're like you're making it. You're making it, really. Yeah, exactly.
And so usually if prices are really low, you're probably going to be better off to buy it. If prices are really high, you're probably better off to mine it. Just like gold, right? When gold hits all-time highs, what happens? Wildcatters get out there and go mine, because you can pay for your expenses. If you need to, you can pay for your expenses in real time because the price is so high. Yeah. If the price is super low, well, the expenses are about the same. Yeah. And, you have to sell maybe most, if not all, or more than all that you mined to try to cover those costs. Whereas if the price is 10 times higher, you might only have to sell 25% of what you mined to cover your
margin
costs.
is significantly different. Yeah.
Right. Yeah. And so that being said, once my miner pays itself off and I get my Ethereum back that I spent, it's all free.
Except for the energy cost.
Except for the energy cost. The new miners that I just built are really efficient, and they're not near as hot. And so they're...
The technology changes so quickly on those. Yeah. It's just like warp speed. You buy what you bought today probably is already out of date. It's just changing so fast that, I'm sure the stuff that you have back from 2017 is almost archaic at this point.
Yeah, but actually, I'm going to try to probably list. I haven't run those miners in a couple of years because the energy cost to get the amount of coin, you're better off just, it's a negative return.
Yeah.
Right. And there are calculators online that can help you figure that out. But you'd literally be wasting money spending the energy, especially on those Bitcoin miners. They're energy hogs.
And that's, and I guess just to simplify that, that's like the energy that, like, that's your power bill at home.
Yeah, that's a power bill.
The power bill that you pay to the power company, the increase in energy from running these computers is not going to be worth the money that you're mining in coin.
Right. Go spend your $300 or whatever it costs you to run it. Go spend it at Coinbase.com and buy it directly. You'll be much better off. And with mining, there's some significant technological hurdles.
Yeah, exactly.
Right. Like programming these things and keeping them running is not for amateur computer hobbyists. Like I'm really lucky in that. I mentioned him earlier, my buddy James, who introduced me to Ethereum and built my first miner for me. He's been instrumental in me being able to keep these things running.
Yeah.
Right. You need, if you don't have a really high level of computer proficiency, you need somebody that does and willing to help you for potentially hours at a time. If you want to build a miner, it's best to know somebody who already mines already. Well, you can.
Yeah. Well, I mean, as the cost goes up, obviously, or the value of that specific coin or whatever you're mining, then it just becomes more and more worth it. Looking into the future.
Yeah.
Well, Matt, I know we're basically at time, but I want to ask you one last question. Maybe you can give us a quick answer here. What cryptocurrencies do you have that you like right now?
I don't own any yet. I've got two on my radar, Chainlink and Graph, and they're really on my radar because of what they do, not because they're going to jump in value or anything like that, right? But as we talked earlier, I'm looking for things that bring utility and functionality to the space. So Graph is a little bit more simple in that it's really a platform for search, kind of like Google is a search engine for the internet. Graph is a search engine for blockchain, right?
Yeah.
And so I'm watching that and Coinbase was early investor in Graph, and it's on their page to purchase. And the other one's Chainlink. And I'm most excited about that because one of the shortfalls of the smart contract and the blockchain is that it doesn't interact well with real world information, banking deposits, any sort of data feed from our real world. It's hard for contracts to see any of that data. So there's this intermediary called an oracle that helps connect the real world data to the smart contract. And Chainlink is a big leap in oracle technology. And so it's probably going to open up some doors into opportunities and potential inside smart contracts, right? People are going to be able to build things and design things now with Chainlink that they couldn't a year ago without Chainlink. So this oracle is kind of it's a part of the network. Chainlink is an oracle. It's kind of like search engines a thing. Bing's a search engine. Yahoo's a search engine. Nobody has control over search engine. Anybody can build a search engine, right? Anybody can build an oracle. They built supposedly a really good one. And so that might catapult smart contracts and decentralized finance and industries that aren't existent yet.
Cool.
Those are probably the two that I'm most interested in. I will say that one of the most, something I was thinking about, like this, people are spending money on blockchain and on Ethereum, and there's roughly like 1 million monthly users on the Ethereum network on these different applications and things like that. But there's crazy applications like crypto kitties, where people buy and sell digital kittens for six figures. People are
I'm in the wrong business.
People are buying virtual real estate
On like Second Life or
similar, some sort of simulations. People are buying real estate, and it's like a simulated US, and somebody wants to live on simulated Park Avenue. They want their avatar to live on, own some real estate on Sunset Boulevard or whatever, and people are paying real money for digital assets, which people do anyway. Look at like the games like Fortnite and things like that. Yeah. They make most of their money off of skins. That does nothing for you. Just it's a look. Yep. And so we already see that in our lives. Like that's happening on the Ethereum platform too. Yeah. So I know a guy with some beachfront property.
That's funny. Matt, this is awesome, man. You've shared some great stuff with us. I think anybody from a beginner to someone who's even more advanced would really appreciate everything you said. Matt, at kind of the end of every one of our episodes, we always ask all of our guests to share a little bit of their personal creed with us. A creed is a set of beliefs that guides someone's actions and the way that they live their life. And I know that you've got two great young sons, and I love seeing you post about them on your Instagram and whatnot. But I'm sure you're full of advice. But what piece of your creed could you share with us today?
I'm a big fan of the KISS method. Keep it simple, stupid, and our mantra around our house and in my job is the golden rule: treat others how you want to be treated, and if violating that gets you into trouble, and obeying that rule, it's hard to do wrong with that rule. It's harder to do than it is to say, but you mentioned my little boys. We have confrontation all the time around here, and just constant, treat others as you want to be treated. And then tying that in with, integrity. When no one's watching, treat somebody how you want them to treat you, and yeah.
I liked what you said about those kind of the wholesome values. It'll help keep you out of trouble. It 100% will, especially in even at work and things like that. That it's just like having somebody you work with that you can trust completely, that you know that they're going to do the right thing and have those values is just it's immeasurable, definitely. So I like that.
Yeah, we've got a high moral and ethical standard at our office, and the question I always asks is, if there's any, should we do A or B? Well, what's the right thing to do? We'll do that.
Yeah.
And then whatever the consequences are, we'll deal with those. But when you do something other than the right thing, too often problems snowball.
Yeah.
Instead of dissipating.
Yeah. Yeah, I like that, Matt. I'm trying to do the same with my boys. I've got 4 now, so
I know
it's a wild house on here. But just trying to teach these boys to be good men is something that we're both in the street. You just turned 40 a couple weeks ago, right?
I did about 2 weeks ago.
Congratulations!
You're on top of the hill now.
Yeah, I am.
You're king of the hill.
My birthday is December 29th, and so in 2019, I had this story to my wife of, man, if 40's over the hill, 39 is like peak year. This is going to be my best year ever, and it was 2020, so it was a little bit of a letdown.
Yeah. Either that, or a lot of times they say that the last couple hundred feet of the peak is the hardest part. So
yeah, the apex.
Well, and to that point, I hurt my neck 2 days before my 40th birthday, real bad. I couldn't turn to the right really. And so on my 40th birthday, I was laid up in bed with an ice pack on my neck watching TV. I'll tell you what, it was an emotionally difficult day.
Well, if it makes you feel any better, on my 30th birthday, we had just moved back to Charlotte from Utah, and I was living in my parents' basement. and I didn't have a house. Living in my parents' basement.
It wasn't because you had to. It was because you guys were buying a house.
Yeah.
But that's a little bit different.
We had just moved here. We were waiting to sell our other house in Utah, but I living in my parents' basement at 30. But I did have a job.
Your brain knew different, but your emotions were like, come on.
Yeah. So, well, Matt, thank you
excellent.
so much for your time today. We really appreciate you. For those that are listening, please follow us on a.brothers.creed on Instagram. And thanks for joining today.
Yeah, let's build that creed together.
Thanks, Matt.
Thanks, Ethan. Thanks, Jared.